If you have $1,000 and you want it to become much more, let me tell you that you have come to the right place. If you put your $1,000 in a savings account that pays very little interest, your money will simply grow very slowly. But if you decide to invest in other things, such as company stocks, properties, or even your own education, that same money could multiply quickly and significantly. Now, the question we must ask ourselves is why we should invest. The answer is found in inflation. Inflation is the continuous increase in the prices of goods and services. Simply put, when there is inflation, your money can buy fewer things than before. This graph, which contains the United States Consumer Price Index, shows us how prices have been increasing over time. This index went from 169,000 in 2000 to more than 313,200 in 2024. That is, the accumulated inflation during this period was greater than 85%. To make it simpler to understand, this means that if in the year 2000 a person had $1,000, they could buy 50 t-shirts, because each one cost approximately $20. Now, in 2024, with those same $1,000, he can only buy 27 t-shirts, because the price of each one rose sharply due to inflation. This shows how the value of money decreases over time. Now we know that we must invest to avoid losing the purchasing power of our banknotes. The next question we should ask ourselves is, what should we invest our $1,000 in? People often don't know where to start. That is, most people are not financially literate enough to make investment decisions on their own. If you're one of them, don't worry, this video will help you. And to do this, we will follow the advice of Warren Buffett, probably the most famous investor in the world. Born in the United States in 1942, Buffett has a long history in the financial markets. He bought his first share at the age of 11, and Forbes magazine defined him as the most successful investor of all time. Warren Buffett is currently CEO of Berkshire Hathaway, a company that is dedicated to investing in various economic groups and companies from all over the world. The key to his success is to buy good companies and hold them for a long time, letting them grow and gain more value. At the beginning of 2024, the company led by Buffett had more than 50% of its funds invested in Apple shares, 10% in Bank of America, 8% in American Express, and the rest in companies such as Coca-Cola, Chevron, and many others. As can be seen, the asset portfolio stands out for the diversification of industries, betting on the technological, financial, oil, and food sectors. According to Forbes, today Warren Buffett is the sixth richest person in the world with a fortune of more than $130 billion, being surpassed only by Bernard Arnault, Elon Musk, Jeff Bezos, Mark Zuckerberg, and Larry Ellison. So, given that Warren Buffett is one of the most successful investors in history, we believe that listening to and following the advice of this master of the world of investments can be very useful. Now you may be wondering if you can really earn some money by investing only $1,000. After all, financial market experts typically trade millions of dollars in stocks and bonds every day. Well, this may sound like a fantasy, but yes, it is possible to invest a sum of $1,000 and reap a great fortune if you make good decisions. The first alternative is to educate yourself. It's simple words. For Warren Buffett, the best thing you can do with some money is educate yourself. Investing in yourself means learning new skills that can be useful for any job you want to apply for or business you want to start on your own. In other words, the more training and skills you have, the more they will pay you. It's really simple if you think about it that way. You can invest in yourself through things like books, webinars, workshops, or courses. In fact, thanks to the internet, it is not difficult to find high-value courses that are completely free. For example, learning about digital marketing and coding is becoming very valuable in almost any industry. Currently, the average salary of a person dedicated to digital marketing in the United States exceeds $64,000 per year, while the average salary of a computer programmer or coder is over $73,000 per year. Even once you specialize in a certain area of coding, you will have the potential to earn a higher salary. Learning to program can open many doors for you. Programming languages like Python, JavaScript, and SQL are in high demand. And the best thing about all this is that you can learn all this without having to spend too much money. The key is to never stop learning and look for ways to improve and acquire new skills. As Warren Buffett once said, invest in yourself and you will see the benefits multiplied by 10 without anyone being able to tax or steal them. The second alternative is to use the $1,000 to create another source of income. The best thing about this generation is that, thanks to the internet, it is super easy to create an extra source of income. The hard part is getting to work and getting that business off the ground. But if you invest in your education and knowledge, you can leverage it to create something great. Then, you can use the money you earn to reinvest in your business and grow it even more. Simply put, the goal is to earn passive income. According to Warren Buffett, if you don't find a way to make money while you sleep, you will work until you die. Sounds tempting, right? Generating a flow of money every week without working sounds too good to be true. However, such a thing can be possible with some investment. If we achieve this, we could even achieve a lifestyle that allows us to do what we really like and not spend all day working. You can start a blog, a YouTube channel, or an online store. Yes, it takes work, but once you get off the ground, you can generate passive income. For example, a blog can earn money from advertising or affiliate links, where you earn a commission for selling other people's products. Once our business is automated, it will give us enough income. Even our business may not be 100% passive and requires minimal work, but in any case, we have managed to obtain an extra income. Another example could be someone who writes an ebook on a topic they are passionate about. Once the ebook is published on a self-publishing platform, the book may be available for purchase on an ongoing basis. When readers purchase the ebook, the author earns income from each sale. Before continuing, if you find this information valuable, I encourage you to leave a like and subscribe so you can continue enjoying more content like this. Let's move forward. The third alternative is to invest in the stock market. We could say that another way to obtain a source of passive income is through the stock market. The stock market is a place where you can invest in many companies. For example, you can buy shares of companies like Tesla, Facebook, or Google. When you buy shares of these companies, you become the owner of a small part of them. If these companies make money, you make money too. And if they lose money, you lose too. This happens because the price of the shares can go up or down. Another way to make money by buying shares is by receiving dividends, which is the profit that the company distributes among all shareholders. Warren Buffett maintains that it is possible to grow $1,000 by investing in stocks. But is that really possible? Let's look at some cases. This graph shows us how Tesla shares, which were trading at $12.71 in May 2019, increased almost 1,300% to exceed $177 in 2024. That is to say, an investment of $1,000 made 5 years ago today would be worth $14,000. Not bad, right? Many people may believe that this Tesla case has been an exception, but in truth, that is not true. The financial market usually offers these types of opportunities all the time. In this case, the company led by Elon Musk, Tesla, has been successful in selling electric cars because it has combined innovative technology, attractive design, effective marketing, and a vision of the future that attracts many consumers. Therefore, it is not strange to see the media wondering what the keys to Tesla's success have been. It seems then that in the stock market, it is important to be at the forefront and try to predict which industry and company will be successful in the future. Perhaps that new sector that will have a relevant role in the coming years is artificial intelligence. In fact, many talk about the future of artificial intelligence that is still in its infancy and can amazingly transform important critical systems such as healthcare, agriculture, and scientific research. So will there be a company in the artificial intelligence sector that is the next Tesla and will allow us to earn thousands of dollars in the coming months? One company that is doing well is Palantir Technologies, which often collaborates with government agencies such as the CIA and the U.S. Department of Defense. In the last 12 months, Palantir Technologies stock has risen more than 85%, and this appears to be just the beginning. The fourth alternative, according to Buffett, it is investing in index funds. Index funds are a form of investing that has become very popular due to their simplicity and great returns. In fact, one of the first investments that Warren Buffett made when he was young was in index funds. But what exactly is an index fund? Let's go by parts. An investment fund is like a group of people who contribute money so that a team of financial specialists can invest that same money in the financial market. The profits obtained from this investment will be distributed among all the people who contributed that money. Now that we know what an investment fund is, let's see what a stock index is. A stock index indicates the average value of publicly traded companies. For example, The S&P 500 index represents the average value of the 500 largest companies in the United States. Therefore, we could say that it is an investment that attempts to replicate the performance of a specific stock market index by investing your money proportionally between each of the companies that make up the index. Let's see. In May 2023, the S&P 500 index stood at 4,200 points, while, a year later, it had reached 5,300 points. That is, it increased more than 26%. Having a gain of more than 26% in dollars can be a good start for investors. The good thing about this is that if you don't have time to study companies, learn about investments and choose between the different companies that exist in the market, then it is better to opt for index funds. Another well-known fund that could be interesting is the QQQ, that follows the Nasdaq 100 index that includes the 100 largest technology companies listed on the stock market. In the last 12 months, the QQQ index has managed to accumulate a gain of more than 33%. And finally, the fifth alternative is to invest in real estate. It is very common to hear financial experts say that land is an asset that almost never loses value, and the reason is simple: it is limited and very useful. We need land for homes, schools, factories, and even to plant crops. And with more people living on this planet, demand almost always tends to go up. Both land and properties are a good way to increase your capital. As of 1994, the average value of a home in the United States was $130,000. This has increased more than 220% to reach $420,800 in 2024. It seems that having some investment in real estate is like a kind of insurance so that your money does not lose value with inflation. However, is it possible to invest in the real estate market with only $1,000? The truth is that yes, since today there are companies called REITs, which means Real Estate Investment Trust in English. A REIT is essentially a group of people who pool their money to invest in real estate properties. This allows people with more modest savings to participate in the real estate market without having to purchase an entire property. Imagine a REIT like a mutual fund, but instead of investing in stocks, it invests in real estate. How does it work? They acquire and manage properties such as office buildings or shopping centers. The income generated by these properties is then distributed among the REIT's investors. Two well-known examples of REITs are V&Q and USRT. In the last 12 months, both investments had an increase of around 10%. In summary, in this video we have given you a list of 5 ideas so that you can multiply your income, and it better have been taken from Warren Buffett himself. Now the decision is in your hands. In addition to these investment ideas, what other alternatives do you think can help us multiply our money? Leave your opinion in the comments. Remember, success does not come overnight, but with perseverance and the right tools, you can achieve your financial goals. If you like this video, don't forget to like and subscribe so you don't miss new content. Thank you for watching.